Okay, well, here's a fun topic. When do you find out, what's the first time that you find out that you're in trouble on sales tax somewhere? What's that like?
Oh, yeah, that letter comes in the mail and it's just such a pleasure to open. You know? And there it is, and it's some obscure state that basically, for some reason, has decided that you're not paying what they think you owe. And my experience has been, unfortunately, in the rental staging business as opposed to the retail business, be it Amazon, being Macy's, being it whoever, the rules are incredibly complicated state by state. And in some cases don't make sense jurisdiction by jurisdiction. In some cases, there are multiple jurisdictions that have conflicting rules, and it's immensely complicated.
Right. So then what happens?
You start making phone calls, you start doing research, you start trying to figure out what they want and why, what their rules are, what your interpretation of their rules were, whether correct or incorrect. We've seen situations where we were told by the auditor one thing, and on further research we found that they were wrong, and when it was pointed out to them, they agreed with us. And to sort of look at where we are right now, Mark has dealt with the same situation and got a completely different ruling. So, we got off the hook and Mark got nailed.
Wow.
Exact
So
same
you were working
situation.
with the Department of Revenue in Texas?
Yeah. Yeah. Yep. And they came after us, and we found out that AV, when you include labor, being set up, show, and tear down labor, is a service. The client does not take possession of the equipment, so it is a service, and therefore it is not taxable. If the client takes possession of the equipment, like I'm renting you a computer, I'm renting you a flat screen, then there's tax on that. And not only is there tax on that, there's tax on the cost of getting that to the client. Delivery charges, any expenses, and so on, is also taxable, which is different than other states.
Yeah, the frustrating thing of us in the Texas audit, we both had Texas audits, that we thought we had it nailed, right, is my recollection, right? We were taxing rental, and when it was a rental, the rental delivery, delivery and setup labor, I think you have to do. We weren't taxing, I think, our insurance or the insurance waiver, so we got caught for that. But the operator labor, what they call operator labor, we were not taxing. Well, they said, no, that's not really, you can't prove these is operators. These are supervisors of your equipment. And it's more like some arcane kind of precedent we were talking about before of a crane rental or something like that. And it's real frustrating. It's a real pain in the ass.
Wow.
Yeah. We had a pretty extensive one in our home state where they came in, took over our conference room for 2 weeks, had us dig out every file that they could, every file that linked to another one, that linked to another one, and brought it all out there. At the end of 2 weeks, they decided we were doing it right, that as you described, it was a service, and that we were properly taxing rentals. And after all of that, it was $2,200 that we had to pay, which probably barely paid the person to spend 2 weeks in our building going through all of that. Certainly, for the amount of time they tied up our accounting staff. But it gave us, this is the decision we've got, can we have a letter with this opinion that we can keep on file, and we at least have our state cleared up,
Right, so that opinion only applies to your state, and then when Tennessee or Florida or Texas or whoever comes, you've got to start over again.
That's the scary part of it a little bit, is that they can have a booklet of rules that all say certain hard and fast things, but the decision is still subjective. As the way you guys came up with different answers out of it is that's the scary thing, is someone's going to sit down and, with all of those rules in place, someone's still going to make a subjective determination as to whether you apply it properly or not. You know, one area that this has really come up in, we still do some touring stuff, so it's very visible there when you go into the arenas around the country, because one of the very first places that the taxing authorities saw big money getting away was the sports teams. You know, so they want to go follow the Chicago Blackhawks around or whoever and, you know, get their money out of them, whatever they earned that day. They're going to get the money before those people leave the building. We see the same thing in the tours. The promoters have to settle up the tax for every person on the crew that day. Every traveling person, then the local people are treated as, you know, local W-2 or 1099 people. But
So this is sounding a lot like something that a small company doesn't want to take on themselves.
Absolutely.
Is this time to go get help?
Absolutely, absolutely, yeah.
Yeah.
It's time for an industry-wide summit as to how to deal with it. You know, the states themselves are doing a very poor job of it. They're leaving money on the table. They think they're trying to collect the money, but they're actually leaving money on the table because it's so complicated.
Right.
And, you know, I'm also seeing that they're also hurting their local industries at the expense of the out-of-towners like myself. I mean, perfect example, in Texas, because I know so much about that, I'll use that as an example. You know, a company in Texas, a rental staging company in Texas will buy a piece of equipment and pay use tax on the purchase price of that equipment. And then, once they've paid use tax, they don't have to pay any sales tax every time it's rented out. Now, if, number one, the sales tax, if I've done my business right, is going to greatly exceed the use tax. So the state is taking a one-time revenue stream in exchange for not getting a longer-term, larger revenue stream. Number two, I come into Texas from out of state. I play under the same rules of it's a service business, so I don't pay sales tax on the equipment. But at the same time, I don't have to pay use tax on my equipment that I bring in because it's temporary importation into the state. So my cost is less than a local Texas company because I'm out of state. And that's really bad public policy.
Right. So what about, let's shift to labor, as long as we're picking on states and entities, and Department of Labor and its emphasis on rooting out 1099 employees that should be W-2 and punishing you. Do you have any experience there?
Oh, yeah. Yeah, we went through a large...
You're just Mr. Bad Example.
Well, I mean, it's just you know, over the last year, we've gone through a lot of wholesale changes that were complicated. For many years, we paid our technicians as a salary. There was nobody tracked hours. There was no overtime. There was part of the job, your salary is based on the fact that you're going to work weekends and nights, and if there's nothing going on, you don't need to come in. And at the end of the year, everybody got a bonus that was based somewhat on their billable hours. The government essentially came in and said, you can't do that. Your people need to be paid as a salary non-exempt position, which means they're on 40 hours a week plus overtime.
So the government comes in. It's just it's something that worked for the employee, worked for the employer. We had an agreement that worked, and then the government says no, it's not.
Right.
We think differently.
Yeah.
I'm sorry.
Yeah, but you're correct.
Yeah, it's frustrating.
I mean, and these are well-compensated employees. We're not talking minimum wage people that were trying to sneak a few dollars out of their paycheck every week. These are well-compensated, intelligent, college-educated, but they do not fall into any of the exemptions from the Fair Labor Standards Act of 1935 when everybody worked in a factory. The biggest issue that I'm trying to figure out now is how to deal with travel time.
Yeah, I was going to say, how do you do that now? I mean, now that everything has to be billed and they're non-exempt
Exactly.
employees, and you have to bill them, how does that?
Well, I mean, that's one of the questions of, somebody gets on a plane, they miss a connection in Chicago, they sit on Chicago for, another 4 hours, they get to Las Vegas at 2 in the morning, it's 3 before they get to the hotel. They've billed 24 hours,
Right.
In a day, that's all on the clock, so by day 2, they're on overtime. Is that the intention of the law? It's very unclear.
Big
It's
question.
very unclear.
I'll give away a little competitive secret of ours. There
You
is
don't pay people.
not all of them. Yeah. Actually, we have our attorneys a number of years ago did some pretty incredible work to come up with a qualified plan that you can pay a salary with. It has overtime components to it, but it's called the Bellow Plan, and it was originally designed, and write that down, this is a good note, I'm telling you. This was originally designed to meet the needs of like the NASCAR and IndyCar teams that were out there traveling and worked almost around the
Really?
clock, and they had weeks on and weeks off, and some weeks they worked 80 hours and some weeks, 10 or something like that. So, and we found that it applied to exactly to what we're doing, and all of our full-time event technicians are on the Bellow Plan. And what you have to do to meet the criteria is you have to have a certain amount of weeks that are above and below the number you set, the overtime number you set. Well, like we typically set 45 as the number. And we pay them 45 hours every week. And if they're above and below it a significant amount of times, I think it's like 10 or 15% above the number either way during the year, then you can qualify for the plan. And they can then be paid a salary. And what you have is a Bellow rate, which is a blended salaried rate broken down from the 2,040 hours for a year. That's lower than, say, a union just straight off the list price that you would normally pay. But it allows you to pay them a set salary all year long. They can go buy a house, they can go buy a car and qualify for financing and all of that because they do it. And it's been a great plan for us. I told the attorney when she came up with it, and I said, you've made one heck of a difference in how we'll be able to manage our company moving forward here. And it's been pretty successful, and people do get overtime, but the overtime rate is lower since you're already paying guaranteed overtime during the course of the year, every week.
And do you reconcile that at the end of the year, or do you have to do it on a quarterly basis?
Yeah, we do some quarterly reporting with it. There's no one really to justify it to at the end of the year. If we get audited, we have to, have the reporting in place to show them. But we do they still have to do time cards, and they have to, and we do an hours average. And it's amazing how close the hours average is to the number that you usually set for them. Whether you set it for a 50-hour person or a 45-hour person, it typically runs in that area. Our video guys actually are much lower because they're seasonal. They don't work as much during the summertime. But
Russell, is that B-E-L-L-O or B-E-L-L-O-W?
it's BELO.
B-E-L-O,
Yeah.
okay.
So how do you deal with travel time against that plan?
You just have to charge it for the time that they're actually traveling. You don't have, from our determination that the attorneys and accountants have come up with, you pay just like anybody does for a trade show, universities or corporations. You pay them for the actual time that they're traveling in the air or whatever. You don't have to pay them
In the air.
24 hours a day.
Right. And the Department of Labor is actually fairly explicit about travel time
Yeah.
on the website, because I've had to deal with this quite a bit.
Yeah.
And some of it I consider not very favorable to the employee, because that scenario where they're sitting in the airport, they don't get paid.
They're only paid in the air?
They're only paid in the air.
I haven't heard that one.
Yeah,
Okay,
which is
all right.
which is not necessarily how you would want to treat your employees. So here's an opportunity where you can actually exceed the federal mandate and do the right thing for your employees. But on the other hand, you don't have to pay them from the time they leave their driveway.
Right.
Right.
Commuting to work is still commuting to work.
It's commuting to work regardless of where work
Or to
is,
the airport.
to the airport for a given set
Yep.
mile. So a lot of those things do make sense in context, but you're right, it's hard to get through it all.
I mean, the problem is these laws were all written in an era where people worked in factories. They don't,
Yeah.
they don't address today's workforce.
Yeah. And a lot of people assume work is, between the hours of 8 and 6, Monday through Friday.
Well, oh my, I think we owe these guys a debt of gratitude for sharing their experiences with us. I have 3 words for you. Hire a professional. Sales tax audits that these guys have been through are not for the faint of heart. And I think it's very generous of them to let us know about them and let us know what's going on and some of the things they did to deal with them. These guys have become experts, but at what cost to their company? Okay, how are you working on your business when you're dealing with auditors? Okay, so this is a very expensive thing to have to learn on the go. So my takeaway from all of this, just to cut to the chase, is to pay attention. Start with being 100% compliant at the federal level on labor issues in particular. Then focus on states that you frequently visit or do business in. Now, typically when we talk about labor and tax issues, we spend a lot of time talking about exempt and non-exempt employees and things like that. And that's becoming less and less of a concern. I think we're more and more understanding of how the labor laws work. I think more people are familiar with the Federal Labor Standards Act and how it affects their individual businesses. The word contract labor, however, continues to come up. And I can tell you from experience that contract labor in an organization invites auditors to look more closely. Now, contract labor is normal in some industries. However, in our industry, it's a dichotomy. There are very few areas where contract labor is a normal and good and expected thing. And there's a lot of areas where contract labor is inappropriately applied. And we are drawing a lot of scrutiny at the federal and the state level, and insurance companies are taking a closer look at what we're doing. And these 3 entities are also sharing information. So if a state finds a company that's out of compliance with state tax laws and state classifications of employees, they're passing that information on to the federal level and vice versa. So we're a dynamic industry. We have a lot of different ways of paying folks. We need to make sure that we're following the rules because we're getting a lot of scrutiny. Now, Rusty shares a great solution, and it's called a BELO plan, B-E-L-O. And you can Google BELO employment plans, and you'll get lots of great information about it. Now, you can read the articles, you can get a basic understanding, but this is not something you're going to take on without an expert, advisor, a certified individual to take you through this process. This is not a straightforward approach. There's an employment contract. The rules are very precise. The plan requires a lot of expert labor law expertise to set the thing up. Now, on the other hand, the biggest benefit to an industry like ours, particularly the live event industry, is that a BELO plan simplifies overtime pay, and it'll set a lower rate when overtime does occur, which sounds attractive. But there are trade-offs on that you'll need to consider. So, all in all, a sobering conversation, but a fantastic conversation. This is an example of the types of things that happen for you when you get out of your bubble and you start networking with other CEOs and learning what's going on in the industry and what the real issues are from an ownership standpoint. So, a couple of takeaways, a couple of to-do things that you need to do. First of all, if you don't use a payroll service that has already taken a look at how you do business, then you need to hire a payroll compliance expert just to take a quick look and make sure that you are doing things correctly and how you can protect yourself in the eventuality of an audit. Okay. Hire an outside professional for this. Even the experts inside your organization will need to be validated by somebody outside the organization who's less biased. And if you work out of state, even a little bit, then you need to talk to a sales tax expert as well. Because labor law and labor compliance is one thing, and sales tax is something altogether different. And while the money that's involved in paying sales tax in a state that you didn't know you owed it in is usually not that much, the cost of getting to that determination and that valuation is very time consuming, and your CPA's time, your time can be very, very expensive. So a great discussion. I'm going to go back and watch this one again because there's a lot of subtleties inside there that I want to take some better notes on. We have some resources that we can provide for you that talk about labor compliance, talk about how to manage contract labor and payroll labor together inside your organization, and I hope you'll take advantage of that. So don't forget to share this with your team. Thanks for watching.